Hello, good morning, guys. How you doing? Wherever you are, good morning, good evening, good afternoon. My name is Bryan Rukenya, and I'm happy to be here today on this podcast. And this Annie Rukenya made ready to mingle podcast, so that I can come to you and just give a little bit of an overview on financial wellness. Yeah. I know before we go further, I'd ask us to subscribe, please. Like the video and click the notification bells, but you can get notifications whenever we go online. Thank you. So yes, I'm happy to be here with you guys today. This is a very good day for me to just put aside and just talk to us concerning financial planning. I want to start by just having a talk about how we succeed and how we progress in life, and where is the place of goal setting. Okay, goal setting is important. It's important to have goals at the beginning of the year. Goals that are achievable, that are time-bound, that are realistic. And these goals should be reviewed at whatever stages. Every time you go ahead, you refer back to the goals and see how far are you from the goals. And then when you have that yearly goal, you should always, even as you wake up every morning, it's good even to have daily goals. So that these are smaller goals that will lead you to the greater goal, which is the annual goal. So that every morning you wake up, you know, today I'm meant to see this person, I'm meant to talk to these people, I'm meant to go to this office. And you have goals that by the end of the day, you should have achieved so much. Yeah, keep reviewing it. See if you have attained your goal for the day. If not, then know you have a deficit. Yeah, consider that you have a deficit to catch up the next day. Okay, so that even as you make the goals for the next day, remember you had a deficit the other day, and so you include it in today's goal setting. So then you continue. Now, when we talk about goals in finance wellness, there are goals which ideally are informed by what I like to call the big five. In life, whether you like it or not, there's some goals which you cannot escape. And these goals could be from short-term, mid-term to long-term. Actually, you'll always have short-term goals, mid-term goals, and long-term goals. Okay, so today I want to talk about the goals that are set for the big five. The big five. They're big five because they are major players in one's life. So even as I start to do the first of the five, which is, we call it home ownership. Yeah. So ideally, a boy or a lady, a man or a lady leaves home at 25 years. Purposes to rent a home after leaving the parents' home, they look to renting a home, let's say all the way to the very ripe age of 100. So I'm talking about somebody who has a long life. Okay, so they'll rent all the way to when they are 100. So this tells us, therefore, they will have rented for 75 good years. Now, I want to tell you, and you agree with me, 75 years of rental, when a landlord is breathing on your neck every other month, will not give you guarantee that you'll own that house. And there's not even guarantee, there's no way you're going to own that house. You're paying 75 years of rent, never to own the house. Now, that now brings me to why you have to have a goal of home ownership. You need to know that of that 75 years, you need to put a structure whereby you shall become a home owner yourself. And this is to say, even those who have already their homes, then that's a done deal. But let's talk about those who have to plan to get a home. So those who are planning to have a home, there's some factors you have to consider. So number one, for you to get a home in a very nice neighborhood, okay, that dictates a very good amount of money, tidy amount of money. So that will inform whether you're buying or you're building in that area. It will inform you that you have to have good tidy of money, meaning land on that in those locations, there could be the prices could be high. So if the prices are high, therefore you have to consider what that amount looks like in that area. So it's up to you to take a trip, just go to neighborhoods, find out from sellers how much land goes for that in that direction, in that area. Find out from friends who are built in the same areas how much it will cost for you to also to acquire land there. Make effort to know how much it will cost you. And then, how much will it cost you to build up a home in that area? Or how much will it cost you to, what kind of planning are you doing? Do you plan to buy a ready home? And if you're going to buy a ready home, does it mean you're buying cash? How much will it cost you? If it's not cash, are you taking a mortgage? How long will the mortgage be? And how much will you be paying monthly? Yeah, so the three things to consider. Number one, location. Okay, very key in home ownership goal setting. Location, amount, and time. Again, I also talk to those people who already have a home and they're only looking for, what they're looking for is to get a holiday home or to get, a holiday home or a vacation home, yeah? They also have to consider how long will that be and where is it supposed to be and how are they financing for it. They also have to plan that way. There's somebody who's already have a home but they're paying a mortgage for it. Then your goal will be to consider what time is left in that mortgage. That should be your goal. So you set your goal concerning in that direction, that how much time do I have to clear my mortgage. All right. Then we move to the second big five, which is the higher education, children's higher education fees. Yeah. So this is where now you find, this is where you get your children, you get the children, you consider who are these children? Who are they in their names? This is how you set the goals. You write down their names. So we are talking about planning for tertiary. I always love talking about planning for college. Why do I love that? Because I understand, ideally, most likely you'll be working in the earlier days of the child's schooling, which is the lower primary, upper primary, junior high, senior high. You'll be most likely you'll still be earning an active income. So you're being paid a salary, or your business is running and you're able to pay. And so sometimes that could not. Yes, it can be planned. Yes, it's important to plan from those young ages. But ideally, where I think there would be much strain is when you're talking about college education. All right. So now I move you from from the short term, mid term, I move you to long term. So this child who is being born and those who already are born, then you see how long are they left before they turn 18. Okay. So who are they? Number one, their names, then their age. Okay. So their age will inform you how long is left before they turn to 18? Because 18 is when you join college. So how long has it been? How long is it left till they get turn 18? Yeah. And then therefore, then if these children are the kinds that the ones that we have right now, I think I always go to my son's school and I can hear some children saying I want to be a neurosurgeon. Children already have a clear. They tell you earlier. They have an early thought of what they want to become. Some of them, some may not. So it will be some might not. Some may have knowledge of what they want to become when they grow up. For those who already know, that is good because now you know what they'll end up in the campus in college. For those who don't know, we are their parents. What we do for them, we dream for them, okay? And I've never seen a parent who dreams low for the children. So that will inform, therefore, what career are you looking for them to when they join they join college? What career will they be studying towards? And so when that happens, then the next question will be, which university? All right, because you see, they're not all universities offer what you might be dreaming or the child may be dreaming to do. So you have to answer that question: which university will they be attending? And then the other thing would be thinking about the university would be international or national, whichever. However, it will answer the question of the career the child wants to do. And then the next thing will be the current cost that is for ongoing for that career. Current, okay. So you need to go to Google, just type the courses. And the courses will come on show you locally where you expect, how much you expect in what campuses in their local scene, in the local scene. If it's international, it's also important to Google the university that you know that's out of the country, overseas, and see the current fee, tuition fee that is there right at the point. And then the thing that will now inform you how much you should think of is considering how long they have to till they turn 18. That figure, work it as an inflation factor for this figure that is a university cost today. Because the university cost today will not be the same university cost when the child turns 18. Work out an inflation factor on it. So when now you've realized, you've settled on your mind that, and now you know that your child has so much years before they turn 18, the campus, the career they want to pursue, where is it found, in which company, which university, is it local, is it international? Then go again to the website and see how much is it cost, the cost now for that course in locally, and where it is found locally and how much, or international and how much, and then how much that figure, consider the inflation index factor, therefore work out the inflation factor, and consider in that period to come how much your current figure will look at that time. All right. Then the other thing to consider is that you need to include in the goal planning all children. Yeah, if you have 4, if you have 3, you have 2, you have 1, consider all of them. Yeah, put them in the goal and in the planning. And then the amount that you consider that will fit all these children and the inflation factor and all that, consider breaking it into monthly so that you see how much monthly cash do you want to start now putting aside to meet that figure in the future. So you consider a monthly amount to save. And I want to suggest to us today, it's best to take an investment vehicle towards this. Yeah, you can take an investment vehicle Very good investment vehicles like an education policy, very good plans that are there in the market right now. Consider taking that will be an insurance education policy that comes with a protection. Protection. I know of others that come with a waiver of premium in case you're not there or you're there, the child will still go to school to the point you had suggested they be paid for. So it has an automatic waiver of premium. If you're not there, the company pays in your behalf. If you're there, you pay monthly till the maturity of the term. It has a vehicle. It has a way of increasing, growing your money, because what you put aside monthly will be it will be added to you at the end of the policy term. The policy term, it will come up with, it earns bonuses every year. So it will earn bonuses plus your principal, and you'll get a maturity sum at the end of the term, which means your money will have grown. Yeah, and it means you're biting a bit by bit towards your future education. Again, you can do a money market fund for those who are disciplined. I know money market fund is good for those who know how to save, are disciplined in saving. Why do I say that? Is because I've seen money market fund where you can even put 1 million shillings, but in 3 months' time, the account is completely depleted. Why? Because you have access to the money anytime. So you ask yourself, are you ready to save? If your child is 8 years before they get to campus, or 10 years before they go, or 12 before they attain the year of 18, are you ready to save in the money market for 18 years, or 12 years, for 12 or 10 or 15 years without you touching their funds? So how disciplined are you? Okay. If you are disciplined, that will be a very good vehicle, because it yields as much as others do 12%, others 13%, some are 9%, some are 6%. If you consider that for long term, then you'll gain so much. The other thing, and these are money markets in equity funds, yeah? Yeah. The other thing would be real estate, another vehicle. Say you acquire land and your purpose is to keep it for the next 15 years until your child turns 17, 18, and find a buyer at that point. Remember, land always appreciates. It's one of the best assets. It never depreciates at all. It always appreciates. So in 15 years' time, your small piece of land, or your land that was costing not much, suddenly has gotten value, and it has maybe gained the value equal to what you are looking for at the end of 18 years. And so you can sell it and then take the child to school. Okay, another vehicle that I would speak about, address to, is a SACCO. SACCO is also good. You can choose to save for that whole term, because when it gets to SACCOs, they have a thing of lending you. So you'll be lent for 3 times, some do 4 times of what you've saved. Can you imagine you've saved for 15 years? That amount, even if you do a monthly figure of 4,000 shillings per month, or you triple it to 15,000 per month for 15 years, that's a pretty good amount of money, which means you take 3 times of it, you'll attain the figure that you want to take your child to school. The other vehicle also is a bank account. Yeah, why do you need a bank account? Is important. Where again, it also act like a money market, because now you have access to the money anytime. So what do you mean? What do I mean? Then therefore you should have discipline. I know people who have already done that. They have already set aside a fund which they save in the bank. So both of them work. They're a couple. It's a couple. So both of them works, and every month each of them put an agreed amount of money into that account, and it has been running for the last 10 years. So they know they have a fund for school for their child. I know banks, wherever you go, whichever bank you go to, They have plans. They have plans. You can go and see them. Just have a discussion with them. Long-term plans. What are they? Do they offer? Is it a fixed deposit account? Is it? They'll tell you. They know the right kind of products that they have for these long-term plans. And then you can do any other investment that you think is viable. I also know of Mansa X. Mansa X is also, but these Mansa X are normally short, midterm. They're normally midterm because they address up to 6 months, but you can always extend. You can always extend. This is my cat. Yeah, it's my cat. You can always extend from 6 months to another year or like that, but it matures at 6 months. But it's a money growing. It's a place where you grow your money. So we don't overlook it. It's high. It's for those who have an appetite for risk. If you have an appetite for risk, and you're not risk averse. Yeah, these are good vehicles. You could want to Google them and see where they are found, and it can be assisted. Okay, so that is about higher education. Now I want to talk about the third one. The third one being retirement fund. Okay, this is for those people who are blessed with long life. I learned that risk is in two ways. Number one, demise, early demise, or the next one is long life. It's also a risk. Why do I say that? These are the years when maybe you also lost your eyesight. You're having joint pains, back pains. You're bedridden. These are days when actually there's no active income. You don't go to work, so there's no active income. What happens therefore? These are people who need to live on passive income. Okay, so how do you build a passive income? This means from when you left home 25, all the way to when is your retirement? Is it 60? Is it 65? Is it 70? I don't believe retirement for 55, the ones for the workforce, that to me is not retirement. That to me is a transition. From there, you'll go start farming. So it means you'll still be active. I'm talking about when you're 70, 75, 80, when even you have so much in the bank, but you having so much joint pain, you can't even sign a check. Yeah? You are having so much back pain, you can't make a walk to the bank. This is the time I call retirement, when everything stops working. These are ages when we hit 100, when everything has just stopped. And even you can imagine how far it can go. So that's when I call retirement. If you look at from the point when you have from now to that point, how long has it remained? Okay, so now what do? At that point is when you need to know that you have a monthly expenses that you live on, and that you live comfortably at this point now. Then consider how long how long is it left to the point where you call yourself a retired citizen? Maybe up to 90. How long do you have now left until 90? Yeah. Consider that monthly figure. Consider adding it to inflation factor using the same Bureau of Statistics calculator, or rather index figure, and see how much this amount of this month, how much it will look like in so much years to come. Okay, so then how will you attain to reach that amount? I mean, what will it call for you to be having that similar amount every recurring month? It calls for passive income. Remember your investments. right now, what you're investing in right now. Remember your investment portfolio. You remember your passive income where you have rental income, commercial rental income, yeah. You whereby you have a block of flats, yeah. You have I love talking about it when you build that portfolio, a passive income portfolio, which is home rentals, commercial rentals. When you start it now, it's easier because now you can start. Do you know you can start with low cost homes? They're called high population, the high density home, low cost homes. They're just called low cost homes in the densely populated areas. You can start with semi permanent rooms, singles. You do a lease program. People lease up to 13, 15 years, 25 years. Someone's land, and then you're given the title, and you build affordable homes, single rooms of teen structures, semi-permanent structures, teen structures mostly, and you earn for the next 13 years. Do you know that will be a very good place to start, because from there now you can even move to making them permanent. If you not have bought the land from the owner or bought somewhere closer to that place, and now convert the tin rooms into stone permanent structures, still singles or double rooms, because you'll move from figures of 4,000 to now you start hiring them out at 6,000, 7,000. You'll have grown your portfolio. Again, even as you're still working and you're still active at work, you might think of because you're still working with the goal that you're thinking of the retirement age. So you have that portfolio of the more commercial homes, and then you have your investment portfolio, maybe shares, maybe Mansa X, wherever you'll be, shares and all those bonds and bills, treasury bills. Do a portfolio investment that will have long-term overview. And then I know shares are very beautiful because they grow with time, and you can get dividends for as long as you have the shares. So this can be very good passive income when you're retired, because you'll just be seeing a check every year in your account from the same portfolio. And then you can have a business that does not require your presence. Okay? You can have a business, think of a business that runs and does not require you to be there. So these are all passive income. Okay, so remember, whatever is your monthly monthly comfortable expenses right now that makes you live comfortably right now, consider it when the retirement age will have arrived. Is it 30 years from now? Is it 50 years from now? Is it 60 years from now? Go back to the inflation index on that website I've given you. Consider how much more will it have multiplied? Will it be needful for you to have to equally live comfortably as you're living today, that time? Okay. That's why now you have them, even from the commercial real estate. You can have a PRS account. That's a retirement scheme account, which you can also open in an insurance company, a retirement scheme account. You can have insurance policies, which we talk about the endowments, long-term endowments plans, 15, 20, 25 years plans, which you pay monthly until the maturity at 25 years. Then at that point, once you paid off your maturity figure, you would need to pour the funds into your PRS account or your pension retirement scheme account. And then at the same time, you can also buy an annuity with that PRS account, which you'll be saving monthly. And it's always, we always say there's time to plan for this retirement, so don't be in a hurry. But again, we say starting early could be better. So you start saving every month towards that pension retirement account. So that when it comes that the year of that retirement, when it has happened, and you're now back home and you cannot even work, no active income, then you buy yourself an annuity. An annuity, you can go Google and see what an annuity means and which companies offer them. I think all companies with pensions offer, insurance companies with pension pension fund, they offer annuities. This means your money will, now that you've saved for the years, will be paid to you every month, a portion every month until your demise or until the funds run dry. And if at demise, when it happens in demise, and there's still some balance, there is always a part where the next of kin can be given the money that is the balance. Okay, so you don't lose. You can buy an annuity, which is a good idea. Okay, and then what I said, the business that does not need you to be available for it to run. So all this, and I remember even as you buy an annuity, remember, at this point is where there's that age 0 to 10, 0 to 20, where we are all dependent on our parents. That's when they need to get your medical plan, education plan, and all that. Now, even these latter years, 90 to 100 to 120, you'll also need medical. You regress, you go back to where you were when you were 2 years old. So you need a medical cover even at that point. So when you buy an annuity, the company, the insurance company will also put some of that savings, and they'll put it into a medical plan for you, which is renewable yearly. So which will make it easier for you and for us to make it easier for one to thrive, and needful when they need medical attendance, they'll always be available for them as long as the cover is valid. Okay. Then I want to go to the fourth big five, which is called the holidays. The holiday or vacations. I know life is lived only once. Okay, let's agree that life is lived only once. You need rest. You need fun. And so this allows you, therefore, to understand that you need to take a break of active life. But you need to know where. Is it short term? If it's where, is it locally? If it's locally, that's a short term one. Or if it's international, that could be a mid-term plan. Or if it's a cruise around the world, that will be a long-term plan for you. Okay, so are you the person who wants to do a holiday every year? And I surprise you, whenever you be ready to do that holiday, there will be no shortage of destinations. So it will be up to you to choose which one is appropriate for you. How much do you need for it? So this gives you a goal to consider, that you need to keep money aside. All these goals is idea of you keeping money aside. So how much do I need to keep aside for my short-term travel, or my mid-term travel, or my long-term travel? How much do I need to put aside? How much are they costing now? So how much do I need to keep aside, and for how long before the next date of my due holiday comes? So that will be very important. So then let's talk about the last one, which is personal development. That very thing that at night unastukanga, you wake up sweating. And then in the morning, you cannot even pass, you cannot go past 6 a.m. No way, you cannot go past 6 a.m. in bed. That's what I'm talking about. That thing that always tells you, man, I have to have this. I have to have this block of flats by this time. By this year, I have to have this block of flats. It screams in your head, and you cannot even go to sleep. That in this year, that by this time of the month, I should have started this business, my dream business. Those are the things I'm talking about. That's a personal development I'm talking about. You are really dying to see yourself move to the next level, move to the next plan. You're dying to see yourself grow because you are not you're not content with where you are. You could be too content, but you're dreaming for yourself. You the dreams that can never leave you alone. Yes, these are important place to put a plan towards. How much is it? How much will it cost me? Then how much does it mean for me monthly until that time comes? Then you put a plan aside. Indeed, then you'll be a wise person. And so this is what I talk about. Let's be wise. Let's do our goals. Our planning is important. Written down, I know it's in the book of God that says, write down the vision, for it is for an appointed time. It shall surely come to pass. That he who reads it, an errand, may run with it. Okay, so write it down plainly that this, by this date, by this date, by this date, and then you start implementing it day by day. Always go back to that written vision, written goal, read it again, see your deficit, and then continue at that. That's where we are. And so consider then that you will have sorted yourself, you'll have been fair to yourself because you had put a plan down. The Bible says it's up to the man to plan. The heart of men plans, but it's God's purposes that prevail. So God allows you to plan. He allows me and you to plan. You cannot go without planning. Yet he's the one who will cause it to prosper. So I'll leave you at that point. I know I'll come back again. Maybe next time we can touch on something different or one of the goals and see how to go about it, who are in the market who can offer these things, and then we'll consider it, even as we consider it next time. All the best. My number, even as I give you my phone number, and I know it will attach on the bottom of the screen, 0720 735 795. 0720 735 795. I am Bryan Rukenya again, a finance advisor, and may you be blessed.